The Indian stock market witnessed a decline today. The benchmark indices, Sensex and Nifty, closed in the red. The Sensex dipped by 319.22 points, ending at 77,186.74. The Nifty 50 mirrored this downward trend, falling by 31.75 points to close at 23,361.05. This slump can be attributed to a confluence of factors, both domestic and global. The market sentiment was particularly dampened by the weak global cues. The US market saw a significant sell-off, triggered by the reintroduction of tariffs by former President Trump on imports from Canada, Mexico, and China. This protectionist move sent ripples across global markets, impacting investor sentiment in India as well. The recent budget announcements also played a role in shaping market sentiment. While the budget received a mixed response, the lack of big bang announcements, particularly in infrastructure spending, weighed on investor sentiment. The rupee's performance added to the concerns, as it hit a historic low of 87.28 against the US dollar. The currency closed at 87.1850, marking a depreciation of 0.7%. This weakness in the rupee further exacerbated the negative sentiment in the market. The global market tremors, largely emanating from the US, had a spillover effect on the Indian stock market. The reimposition of tariffs by former President Trump on key trading partners reignited fears of a global trade war. This sent shockwaves through the US markets, with the Dow Jones Industrial Average, the S&P 500, and the tech-heavy Nasdaq all closing significantly lower. Adding to the global woes was the Indian rupee's slide to a record low against the US dollar. This depreciation was fueled by a combination of factors, including the widening trade deficit, rising crude oil prices, and the strengthening of the US dollar. The weakening rupee further dampened investor sentiment, as it made imports costlier and put pressure on corporate earnings. Meanwhile, the recent budget presentation, while hailed for its focus on fiscal prudence and rural economy, failed to enthuse the market in its entirety. The absence of any major announcements for infrastructure spending, a key driver of economic growth, left investors disappointed. The lackluster response to the budget was evident in the performance of sectors like capital goods, infrastructure, and construction, which closed in the red. The market had pinned its hopes on big-ticket investments in these sectors to boost economic growth. However, the absence of any such announcements weighed on investor sentiment. The earnings season continued to unfold, presenting a mixed bag of results. Power Grid Corporation of India reported a 4% decline in its net profit for the third quarter, which stood at 3,861.6 crore rupees. This dip in profit was attributed to weak demand. However, the company declared a dividend, offering some respite to investors. GRS, on the other hand, reported a robust 11% year-on-year jump in its net profit for the third quarter, reaching 98 crore rupees. The company's revenue also surged by an impressive 38% year-on-year to 1,271 crore rupees. This strong performance was driven by a healthy order book and efficient execution. GRS also announced its highest-ever dividend of 8.50 rupees per share, signaling confidence in its future prospects. Barbecue Nation Hospitality delivered a 4.54% rise in its net profit for the third quarter, which stood at 5.05 crore rupees. However, the company's revenue witnessed a marginal decline, reaching 328.89 crore rupees. This mixed performance reflected the challenges faced by the restaurant industry amid evolving consumer preferences and increasing competition. Divi's Labs continued its impressive run, reporting a stellar 64% year-on-year surge in its consolidated profit after tax for the third quarter, which reached 589 crore rupees. The company's revenue also registered a robust growth of 25% year-on-year, driven by strong demand for its products and services in both domestic and international markets. The market's performance today painted a tale of two contrasting narratives. On the one hand, sectors and companies that benefited from the budget announcements or reported strong quarterly earnings witnessed buying interest, propelling their stock prices higher. On the other hand, those impacted by global headwinds, budget disappointments, or weak quarterly results faced selling pressure, dragging their stock prices lower. Among the top gainers, Bajaj Finance stood out with a 5% surge in its stock price. The company's strong financials and positive outlook for the financial services sector contributed to its impressive performance. Swiggy, the online food delivery platform, also witnessed a rally, with its stock price rising by 3 to 5%. Positive coverage by Kotak Securities and the company's continued growth in the online food delivery market bolstered investor confidence. UPL, a global provider of crop protection solutions, saw its stock price jump by 5% following strong third-quarter results and an upgrade by Investec. ITC Hotels also joined the gainers list with a 5% rise in its stock price, driven by the positive outlook for the hospitality sector in the post-pandemic era. Maruti Suzuki, India's largest car maker, witnessed a 4% increase in its stock price, supported by steady sales and robust export growth. Conversely, the losers list was dominated by companies impacted by global headwinds and budget disappointments. Larsen & Toubro, a bellwether stock and a proxy for the infrastructure sector, witnessed a 5% decline in its stock price. The company's exposure to global markets and the lack of any major infrastructure push in the budget weighed on investor sentiment. NTPC and Power Grid Corporation, both power sector majors, were also among the top losers. NTPC's stock price was impacted by the overall weakness in the power sector, while Power Grid's decline was attributed to its muted quarterly results.